Welcome to the official video overview for the initial public offering of Sathya Agencies Limited. We are the largest consumer durables and electronics focused retail player in South India in terms of number of stores as at March 15, 2026 and the largest in Tamil Nadu and 5th largest in India among our peers in terms of revenue from operations for fiscal 2025. Source Crystal Report. Initial public offering of Sathya Agencies Limited. This video is directed at and is intended for distribution to and used by residents of India only. No part of the contents of this video shall be copied or duplicated in any form by any means or redistributed. You are viewing this video on the basis that you have confirmed your representation, agreement and acknowledgement to the book running lead managers, BRLMs and Sathya Agencies Limited that you are the intended recipient of this video and you are located in India. If you are not permitted to view this video or are in any doubt as to whether you are permitted to view this video, please exit this video. Caution: investors are advised not to rely on any other document, content or information provided in respect to the public issue on the internet or online websites, social media platforms or microblogging platforms by finfluencers. Investors are advised to wait for the red herring prospectus to be filed in relation to the offer for making any investment decision. Investors are advised to read the draft red herring prospectus and draft abridged prospectus dated March 30th, 2026. Initial public offering of up to equity shares of face value of ₹2 each. Equity shares of Sathya Agencies Limited, our company or the company, for cash at a price of rupees per equity share, including a share premium of rupees per equity share offer price, aggregating up to rupees 6,000.00 million, comprising a fresh issue of up to equity shares of face value of ₹2 each, aggregating up to rupees 3,000.00 million by our company, fresh issue, and an offer for sale of up to equity shares of face value of ₹2 each, aggregating up to rupees 3,000.00 million offered shares by the promoter selling shareholders. Our company was incorporated on February 24, 2005 and its registered office is situated at number 2/174/4 and 2/174/5 Parayam Kottai Main Road, NH7A, Maravan Madam, Tuttikorin, 628101 Tamil Nadu, India. We are the fastest growing electronics retailer in terms of CAGR in revenue from operations and profit after tax between fiscal 2023 and 2025 among our peers. Source Crystal Report. Our business has over 3.5 decades of legacy, having been originally established as a proprietorship venture in 1987 in Tuttikorin, Tamil Nadu. Since our incorporation, we have evolved into an organized consumer durables and electronics retail chain with a significant presence across South India, supported by brand recognition among customers, a diversified consumer electronics and home appliances portfolio, an extensive network of physical retail stores and integrated post-sales customer support, enabling customers to rely on us as a single point of contact for purchase, installation and after-sales support. We offer a comprehensive portfolio of consumer electronics and home appliances products across multiple price points and categories, catering to a broad customer base. As at January 31st, 2026, our product range includes large appliances such as air conditioners, televisions, refrigerators and washing machines, mobiles, IT products and accessories, and small and kitchen appliances such as water heaters, mixer, grinder, gas stoves, fans and consumer electronics accessories. As at January 31st, 2026, we operated a total of 427 stores across 4 states, namely Tamil Nadu, Andhra Pradesh, Kerala and Karnataka and the Union Territory of Puducherry, and we operated 22 warehouses in Tamil Nadu, Andhra Pradesh, Karnataka and Kerala. Our workforce comprises 3,516 permanent employees as at January 31st, 2026. Investors should note the following important risks before taking any investment decision in the offer. 1. Our operations are significantly concentrated in Tamil Nadu and any adverse developments in the state could materially and adversely affect our business, financial condition, cash flows and results of operations. 2. Our business is dependent on customer footfall at our physical stores and any sustained reduction in store visits, including due to increasing consumer preference for online purchasing, could adversely affect our sales, inventory efficiency and operating performance. 3. Our business depends on continued and timely procurement from our top 10 suppliers for a significant portion of our inventory requirements, and any disruption in, loss of or adverse change in our relationships or commercial arrangements with such suppliers could materially and adversely adversely affect our business performance and financial condition. 4. Our inability to accurately forecast consumer demand and maintain optimal inventory levels may adversely affect our business, financial condition and results of operations. 5. Our inability to identify and respond to evolving consumer preferences, product cycles, retail formats and technology adoption may adversely affect our business, results of operations and financial condition. For further details, see risk factors on page 24 of the DRHP. The promoters of our company are Johnson Asaria, J. John Sathya and Charles Pakayaraj in aggregate hold 219,555,000 equity shares of face value ₹2 each, which constitutes 92.25% of the pre-offer equity share capital of our company on a fully diluted basis. The aggregate pre-offer shareholding of the promoter selling shareholders as a percentage of the pre-offer paid-up equity share capital of the company is set out below. For further details, see the offer on page 67 of the DRHP. As on the date of the draft red herring prospectus, we have 6 directors comprising of 3 executive directors and 3 independent directors, including 1 woman independent director. For further details of our directors, see our management on page 272 of the DRHP. Sathya Agencies Limited's revenue from operations stood at rupees 19,966.68 million with an EBITDA margin of approximately 7.27% as at 6 months ended September 30th, 2025, and revenue from operations stood at rupees 34,968.73 million with an EBITDA margin of approximately 6.37% in FY 2025. The company registered an PAT of rupees 267.09 million, reflecting a PAT margin of approximately 1.34% as at 6 months ended September 30th, 2025, and PAT of rupees 462.69 million, reflecting a PAT margin of approximately 1.32% in FY 2025. Investors are advised to read the DRHP, including pages beginning 368 for further information on financials of Sathya Agencies Limited. A summary of pending material civil, tax and criminal proceedings involving our company, subsidiaries, directors, promoters, key managerial personnel and members of senior management as identified by our company pursuant to the materiality policy adopted by our board is provided below. Further, as on the date of this draft red herring prospectus, there are no pending litigation proceedings involving any of our group companies which will have a material impact on our company. For further details, see outstanding litigation and material developments on page 417. The net proceeds from the fresh issue towards funding A. repayment or prepayment in full or part of certain outstanding borrowings availed by our company, B. payment of partial purchase consideration for the acquisition of our wholly owned subsidiary Unilet Appliances Private Limited, and C. general corporate purposes. For further details, see objects of the offer on page 108 of the DRHP. The IPO is being made through the book building process with allotment of not more than 50% of the net offer to QIBs, not less than 15% of the net offer to non-institutional investors, and not less than 35% to retail individual bidders. The employee reservation portion shall constitute up to % of the post-offer paid-up equity share capital of our company. The equity shares are proposed to be listed on BSE and NSE. The book-running lead managers to the offer are Anand Rathi Advisors Limited and Motilal Oswal Investment Advisors Limited. Please see page 438 of the DRHP for price information of past issues handled by the book-running lead managers. Investments in equity and equity-related securities involve a degree of risk, and investors should not invest any funds in the offer unless they can afford to take the risk of losing their entire investment. Please read the draft red herring prospectus and draft abridged prospectus dated March 30th, 2026 and any corrigendum or addendums thereto. Potential investors should rely on the red herring prospectus to be filed in relation to the offer and the price band advertisement for making any investment decision in the offer. Neither our company nor our promoters or promoter selling shareholder are seeking any investment from you based on this video. This is a video for information purposes only and is not a promotional video and does not constitute an invitation or offer to acquire, purchase or subscribe to the equity shares of the company. Potential investors should wait for the red herring prospectus to be filed in relation to the offer for making any investment decision.